right, good morning. Today is Friday, November 15th, and I am going to go through the Biogen stock trade, BIIB. Last couple of days we've been looking at this market. Market came down into what I believe is to be a support zone right in here, right? Overall trend is up. Even though the movement down from this high here, right? So, you know, really short term, obviously the swing is down, but I believe this is a retracement of the overall trend. Let's back this up again and take a look. I mean, overall, take a look at the bigger picture here, right? I mean, take a look at this. The market had a real nice run up over here, put in this high, right, came down, consolidated for a little bit before breaking up to the new highs right in here, right, made a new high there, came down, right, blue action zone, gray action zone, two areas which should act as support. Well, the blue action zone here didn't really act as support. Market went further down, but held beautifully at my gray action zone, bounced up to new highs. Now, if the market was not able to bounce up to new highs, right, it took out this high here, it bounced up, made a new high, and came down. Well, again, this area should act as support. So, but instead of buying it automatically, waited for a little, right, we had an inside pattern here, consolidated, and when the market took out this high, went long this market. So if you recall, went long this market at a price of 235.83. Actually, I got filled at 235.67, if you recall, because I waited for a little pullback. The initial stop loss was down in here. First profit target is this first white horizontal line at 247.23. Second profit objective right up in here. So really, the first profit target, you know, we've got a 2-to-1 risk to reward ratio starting off the trade, which I believe is good when first putting on a trade. Right, it's all about managing a trade. So as the trade progresses, that reward to risk becomes more favorable. Okay, so again, when first putting on this trade, I was risking $5.03, right? Basically $2, right? 2 points less than the ATR. I mean, look at the 21 average true range is $7.05. That's a pretty big average true range. My initial stop on this was 503. Now, I know some would argue and say, well, you need to be risking at least one ATR. It's just based on this strategy, this particular trade setup, when the market penetrates up through a high and it gets you long, it doesn't make sense to keep the trade if the market reverses down and takes out that low of that same day, because if that happens, we've created an engulfing pattern, right? It takes out the high and the low. So that's why it's smaller. So I want to answer some questions. That's the reason behind many times risking less than the average true range, okay? Because of the entry itself. Remember, the entry has to really match and mesh well with the stop loss, right? A breakout strategy as opposed to a retracement strategy, right? Entry into the market. The stop losses need to be different, okay? So you need to understand that. So on this trade right now, okay, look at yesterday. Yesterday, we've got like what I call a bearish blow-off bar, or for those of you that really love candlestick charts, I think it's a bearish hammer, right? I mean, look at the open and close are near the low of the day. The low of the day is 236.50, close at 237.58. So the open and close are near the bottom of the range after trading up to 240.84. So what I'm going to do now is I'm going to move my stop to break even. This now becomes a free trade. It's a free trade. So I risk absolutely nothing. So I'm long this market. Now I place the sell stop exactly where I bought it at 235.67. So I've got a sell stop at 235.67. So this is a free trade. There is no risk on the trade. It's free. Okay? So again, when I first put the trade on, I was risking $5.03, looking to make a minimum of $9.74. So very close to a 2-to-1 risk to reward ratio. Now this trade is the reward to risk is literally, what, 5 to 1, right? I'm looking to make 5 points and I'm risking nothing on the trade. So, trade management is very important. And so your first objective is to lose as little as possible on any single trade that you put on. Yet, you need to place that initial stop loss, right? The initial catastrophic stops needs to be far enough so you're not just nicked out here and there. You need to give the market enough room to breathe, okay? But when the market starts to move in your favor like it did yesterday, you need to be defensive. And so I'm moving the stop from down in here up to this level right now. All right? So now this trade is a 5 to 1 reward to risk, right? Looking to make 5 points, risking actually nothing, right? So that's a great, a great place to be in any trade, and I think you'll all agree. Hope that helps. Have a profitable day, and I'll be back with you on Monday. Bye for now.